Okay guys, welcome back to our channel Independent Training. Today we are going to discuss one of subject in accounting, that is good corporate governance. Why it should be good, we are going to discuss later. So overall, today's discussion will be the definition of concept corporate governance, and then moving forward to components of corporate governance, and then the last one will be the benefit if we are implemented good corporate governance. So this will be the overview of our content for today. So please guys, don't forget to subscribe in channel Independent Training. Okay guys, welcome back to our channel Independent Training. Like I'm mentioning before, we are going to discuss good corporate governance, one of subject in accounting usually. Today's discussion will be the concept of corporate governance and essential principle of corporate governance. So this is quite important to be noticed because corporate consists of several units. They are also consist of several interests that BOD should, this is the concern of BOD, to be should be combining, should be synchronized among each other, so it can be create one of good corporate governance that easily implemented in corporate. So let's moving forward to the very initial definitions. That this is early attempt to define the concept of corporate governance appeared in the United Kingdom and then South African King in 1994. Defining corporate governance as the system by which companies are directed and controlled. So two words that I put underlined here, directed and controlled. It seems those two words are not particularly helpful in clarifying the meaning of corporate governance. So directed and control, it seems, should be enhanced, should be we should put another variable, we should put another word. So the definition of corporate governance is current development. It's more changing into the business process because corporate is very dynamic, especially in their business process, and also the corporate governance is depend on the culture, usually corporate culture or culture in several countries. Yeah. So directed and control will be enhanced. Yeah. Okay, so we are moving forward to the next definition. Corporate governance refers generally to the legal and organizational framework within which and the principle and process by which corporations are governed. So the term of directed and control will be replaced by the legal term. Yeah, so the legal, it means set of rules, usually the rules from minister, and then the set of rules from stock exchange, or might be the set of rules from industry. Yeah? So government taking place, to put the terms legal over here. Yeah? It refers in particular to the powers of accountability and relationship of those who participate in the direction and control of companies. So the terms of accountability, it means how to define, but in the example, if you giving someone assignment, it means also you should knowing what will be the assignment and then how to control. So in other words, accountability, it means you should have organizational structure that complete with the duties and this assignment. Yeah. Chief among these participants are the board of director and management. Yeah. Board of director like CEO, chief executive officer, chief risk officer, or chief financial officer. That will be the component of board of director. Yeah. There are aspects of the corporate governance regime that have an impact on the relationship between shareholders and then company. Yeah? So if you notice, you already have board of director and also the shareholders. Yeah? So there are two different parties that have conflicting of interest. Yeah? Board of director, they have their own interest. Yeah? They are doing their day-to-day operational duties, and then the shareholder, they are just put the capital, but in the same time they are not dealing with the day-to-day operation. So remember that BOD and then shareholder, they have conflicting of interest. Yeah. So I already put here several words that we should aware that the first word will be legal. Legal, if you have legal, it means you have powers, accountability, shareholders, and then board of directors. Okay, so we are moving to another. This is another definition from corporate governance. Simply defined, corporate governance consists of all people, process, and then activity in place to help ensure the proper stewardship over company asset. Yeah. To help ensure the proper stewardship over a company asset. Yeah. So remember, the company asset is belong to shareholders, not belongs to BOD. Yeah. So the company asset is more giving interest to the shareholders, yeah, than the BOD. Yeah. Corporate governance is the implementation and execution of process to ensure that those managing a company properly utilize the time, talents, and available resource in the best interest of absentee owners. Yeah. So the duties of BOD is to make sure the process managing company properly utilize the time. It means office hour. Talent, yeah. Talent, it means you put the right person in the right positions, yeah. And then available resource in the interest of absentee owners, yeah. Available resources. So it means you should be very efficient in terms of using company asset. Yeah. This process includes all aspects of company performance, including risk management. Yeah. So the term of risk management now is more quite famous. Yeah. So several researchers, they are saying that risk management is part of corporate governance, but it depends on the definitions, which one that we are going to use. But most of the corporate governance aspect, they are put another perspective is risk management as part of corporate governance. Operational and marketing strategy, see now more enhanced, that already operational and then marketing strategy becoming part of corporate governance. Internal control, for sure, usually in internal audit division. Conformance with applicable law and regulations, yeah. Applicable laws and regulations. If you are in the previous definition, they put the term legal over there, and then the legal over there will be replaced by the applicable law and regulations. Public relations, communication, and financial reporting. Yeah. So financial reporting is part of accounting aspect that relate to the corporate governance. Yeah. So this is quite comprehensive definition of corporate governance that we can use, because of corporate governance now becoming more broader. So we should notice that this is quite complicated to explain and then to relate all the aspect, all the unit, all the parties in the corporate. Yeah. So I guess this is the better word to describe. I guess this is the better definition to describe corporate governance in times of usually might be in times of this current situations. Yeah. So let's end up with the definitions. So at first, the only real concern for company was the maximization of profits, right? So shareholders only concern in the early, shareholders only concern of profit maximization. So how about the other parties? We have financial authority. We have financial service authority, usually under government, under Minister of Finance, and then we have also stock exchange. We also have the tax authority. We also have community. That will be the other part of the other concern that we should be noticed, not only to maximize profit. So the shareholders are the owners of the company. Okay, the primary stakeholders are the most important provider of capital to enable the company to conduct business. So we have shareholders, we have stakeholders. So this is the additional terms that you should notice, that the shareholders is they are the owners of the company. For sure, they have shares. That's why we call it shareholders. But the stakeholders is the other party that relate to the company. Yes, stakeholders, they do not have shares, but somehow their existence is quite important for our sustainability. Like, this is corporate, you cannot exist without tax authority, right? Because you should your obligation to pay taxes in the end of a financial year. Or might be your organization, and then this is your organization, and then you have community surrounding your corporation. It means you can't be exist without the community. So community will be the stakeholders. Yeah. So is it important to be noticed? Yes. So the sophisticated investors, sophisticated shareholder, they are already noticed that we have another aspect other than profit that should be concerned. Yeah. Gradually, this perception change. I put highlight over here, and then the company, especially the large public company, came to be seen in different light. People realize that there were other stakeholders in a company too. So, assuming that in the future you are becoming BOD, your interest is not only to satisfy the shareholders in terms of profit maximization. You also should be concerned to the development of community around your corporate. You should also concern about the development of your employee, how they can be enhance their knowledge, their competency, and also you should be concerned with the all aspect, all the unit, all the parties that outside the company. Yeah. How can you be so concerned about the creditor? How can you manage your relationship with the supplier? Yeah, that will be the stakeholders. Yeah. So yeah, that is quite complicated. Yeah, if you are becoming one of board of director. Yeah, that will be the challenge of the good corporate governance implementation. If you are notice this definition that it relate all the aspect of the company. Yeah. So we are moving forward. Now we are going to discuss the shareholders and then stakeholders. Yeah. So we have shareholders, yeah, on top of your organizational structures, yeah, and then you have stakeholders. Yeah. So stakeholders will be the supporting unit, supporting parties that will be enhance your company. Yeah. So shareholders and then stakeholders. Yeah. In between these two parties, I put the word managing. So another source, sometimes they are calling not managing, but should be equally. But I guess it's quite difficult to, because equally it means I prefer use the term of fairness. Yeah. So it should be fair. Shareholders and stakeholders, they have different interests. They have different contribution to our company, so we should treat them different according to their interests. Yeah. So I prefer not equally, but to treat them fair enough. Yeah. Okay. So don't forget, shareholders consist of controlling ownership and non-controlling ownership. Yeah. It means if controlling ownership, they have majority shares, or usually they have majority number of shares, and then non-controlling ownerships, they have sometimes below controlling ownership. If we put number, controlling ownership assuming 50 or 60% of 100%, and then non-controlling ownership will be 10%, 5% of ownership. Yeah? That will be the shareholders. Yeah? And then stakeholders is employee, tax authority, supplier, creditor, financial service authority, community, and environment. So don't forget that stakeholder is quite important, right? Yeah. So the component, we have 4 components. Is the system of regulating and overseeing corporate conduct. Yeah, takes into consideration the interests of internal stakeholders and other parties who can be affected by the corporation's conduct, aims at ensuring responsible behavior by the corporation, has the ultimate goal of achieving the maximum level of efficiency and profitability for corporations. Yeah? So this will be the component of corporate governance. Yeah? So that will be our discussion regarding the concept and essential principle of corporate governance. We are moving forward to the next content, specifically discussion regarding principle of corporate governance. Okay guys, that will be our discussion a temporary discussion regarding the essential and then principle of corporate governance. Yeah. Next content we are going to discuss the principle of corporate governance in more detail. So don't forget to subscribe to our channel Independent Training. Don't forget also to share and then like and then also comment. Stay in Independent Training.